Ladies and gentlemen, good morning. My name is Christoph Husmann. I'm the CFO of Encavis AG. Encavis AG is a listed owner and operator of solar and wind farms all over Europe. We are with a market capitalization of 2.8 billion and currently 1.8 gigawatt of own capacities, one of the medium-sized players in the renewables, and by the pure play renewables, one of the larger players. In addition to that, we do have an asset management business, which runs 1.2 gigawatt of capacities of renewable parks for third-party investors as well. As a matter of fact, we are a company which is focused on low-risk investments in renewables with a very long horizon. We have our investments usually covering a time period of 30 to 50 years, looking into the future. Well, ladies and gentlemen, we today released our three-quarter interim results, and I would like to discuss them with you. Ladies and gentlemen, the figures we released this morning were 27% above the EPS figures of the previous year's three-quarter results. And this is explained by a huge increase of our energy production. We increased the energy production measured in gigawatt hours by 55% compared to the third quarter of last year, up from 501 gigawatt hours to 778 gigawatt hours. Unfortunately, meteorology did not really help and support us here. So if we only have a look into the portfolio which already existed in the third quarter of last year, the number of gigawatt hours decreased from 444 gigawatt hours last year to 413 this year, down by 7%. So that relative meteorological weakness was overcompensated by the overall growth in our company. But this meteorological development is not a trend. There are ups and downs. So this year, in fact, we are pretty much on plan, pretty much having standard weather in our 10 countries in Europe. But previous year was a pretty good year, and so therefore we have a negative deviation if we compare our this year's figure with a very strong meteorological previous year. These 778 gigawatt hours were accounted for in revenues as for 97 million euros in that single quarter, which is an improvement by 22% compared to the last year's figures. The EBITDA and EBIT usually improves in the same percentage-wise amount, so both grew by 19 or 20% compared to previous year's third quarter. The operating earnings per share, which were realized in this single quarter, are 19 euro cents, up 27% compared to previous year, and the operating cash flow improved by 51% compared to previous year's figure, and now is at 78 million euros. If we then have a look into the cumulative figures, we see the same already in our gigawatt hour. We have here 35% increase compared to previous year, totaling up to almost 2.2 terawatt hours we produced this year. But again, this was not supported by the meteorology, 11% down compared on the same capacities we had last year compared to this year, 11% down due to pure meteorology. But as you might recall, it was 7% down in the third quarter. It's 11% down over the whole 9 months. And this is due to a very, very bad first quarter, which we are now step by step compensating over the quarters. And so we are closing the gap in relative figures slightly. Again, in 9 months, we are full on plan. With revenues of almost 260 million euros and operating EBITDA of more than 195 million euros, we are 11 or 8% above previous year. Please have in mind that meteorological shortcomings usually are 100% reflected in revenues and the profit lines because there are no cost compensating meteorological shortfall. And new additions which we have creating new revenues usually come along with additional costs and therefore with lower margin contributions here. So if we take the meteorological relative weakness of this year out, or the meteorological strength in previous year's figures, then you see on the right-hand side that we have strong growth rates all over the three lines: revenue, EBITDA, and EBIT. The operating EPS is still falling short compared to previous year with a very strong meteorological conditions due to the very weak first quarter this year. And the operating cash flow is above what we had last year. If we compare these figures with the consensus, so that means with the expectations of the market, then we have to admit that we reached and fulfilled all expectations and even exceeded them, specifically in operating cash flow, where we are in the third quarter figure as well as in the cumulative 9-month figures, 10 million above the expectation. The same applies to earnings per share in both third quarter alone, and in the cumulative figures, we are 1 cent ahead of the expectations. If we have a look into our segmentation report, you see a strong growth in solar parks with 2 big additions. We added 500 megawatt of capacities in solar parks in Spain to our portfolio, creating that huge growth we see here, which is only a little bit eased by meteorological effect, which is of minor extent in the solar, and therefore strong figures in that segment. In the wind farms, where we have only had small additions in our capacities, we have a reduction of our revenues due to severe meteorological changes. Pretty good year last year and a weak year this year. So that is reflected in our figures here. The technical service is well off as it was in the last year. It is pretty uninfected and unimpressed by any meteorological changes. But as a matter of fact, the EBITDA and EBIT is reduced, but only to one-off disposal profit in last year's figure of 1.9 million euros, which we couldn't repeat this year by nature. The asset management had a very good start into the year with almost 85% increase in the revenues due to better sales, and that is reflected in a quadrupled EBITDA and in very strong growth in EBIT. In the headquarters, we streamlined our costs and therefore could reduce the cost from 7.4 million previous year to 6.5 this year. That growth of our parks, 35% more kilowatt hour production, is reflected in a growth of 8% in our balance sheet due to the full consolidation of the new parks which are connected to the grid, and all that with this very stable equity ratio of 25% compared with previous year's 36.6%. Now, having a look into the future, we published a guidance of more than 320 million euros for the full year and more than 240 million euros EBITDA for the full year, and operating EPS of 46 cents. Today, released figures, we already reach between 80 and 89% of that year's guidance. This is not unusual, having in mind that our portfolio is 75% dependent on solar, and now we are in the winter quarter where the sun irradiation is not as high. So having said that, we believe that we are very well on track to reach our guidance, and therefore the executive board confirmed the guidance 2021, and we strongly believe that we will reach it. Ladies and gentlemen, thank you very much for listening. And so we are open for any questions. So please do not hesitate to contact your Peters or our investor relations department. You will find the email address on our website. We're happy to come into discussion with you, and thank you very much for your audience.
Hi there, since you watched this company video until the end, I'm guessing you liked the video, and that's probably because we work very hard to create the most engaging and added value content for you. If you're a company and want to find out how we, at Seat 11A, can make a company video with and about you, please email us at content at seat11a.com.